Visa just delivered another blowout quarter, and while everyone's busy chasing the next big thing, Visa just quietly crushed it again. If you're building serious long-term wealth, this is the kind of stock you need to know about. Behind every earnings beat is a quiet, compounding machine, one of the most powerful business models in the world. While most investors are glued to hype stocks and headlines, Visa keeps doing what it's always done: grow, scale, and reward shareholders. We covered the highlights of this latest earnings results in a recent shorts video, but in this deep dive, we'll unpack why Visa might be one of the most underrated long-term holdings in the market today. Let's start with what Visa actually is, because this often gets misunderstood. Visa doesn't issue credit cards, it doesn't lend money, it's not a bank. What it does is operate the infrastructure behind the world's payments, the toll roads of the digital economy. Every time you tap your Visa card at the grocery store or book a flight online, Visa takes a small fee for processing that transaction. The key word here is small. We're talking fractions of a percent, but multiply that by over 260 billion transactions a year and you begin to see the magic of scale. And here's what makes Visa's model even more powerful. It doesn't take on credit risk, that's the bank's problem. Visa simply sits in the middle, getting paid whether the transaction is $5 or $5,000. And it can expand globally without adding much cost. This is what Warren Buffett loves to call a capital-light compounder. Now let's look at the numbers, because Visa's financial position is not just solid, it's elite. Over the past decade, Visa has grown its revenue at a steady 10% plus annual clip. Profit margins around 50%, among the highest in the entire S&P 500. Return on equity often above 35%, and it consistently converts earnings into cold hard cash, generating over $17 billion in free cash flow last year alone. In its most recent earnings, the one that just dropped, Visa reported $8.8 billion in revenue, up 10% year over year, and net income of $5.1 billion. That's a profit margin of nearly 58%. These aren't just good numbers, they're the best in class. And Visa doesn't just beat expectations, it does it with consistency. Quarter after quarter, year after year, a compounder in every sense of the word. Now let's talk about what really matters for investors: results. If you had invested in Visa at its IPO back in 2008, you'd be sitting on more than 1,700% of total return today. And that's after accounting for the global financial crisis, COVID, inflation, and tech meltdowns. That's more than 17 times your money. But let's zoom out even further. Visa's predecessor company, Visa USA, began operations in 1970. Since then, the company has evolved through consolidations, listings, and global expansion. If you'd owned Visa or its equivalents for the past 25 years, reinvesting dividends along the way, your total return would be over 6,000%. That means a $10,000 investment in Visa 2 decades ago would be worth well over $600,000. These aren't speculative returns, they're built on cash flow, scale, and long-term discipline, not hype. So where does Visa go from here? The magic here is that Visa is still riding multiple global tailwinds. Even though it dominates in developed markets, there's still massive upside in emerging economies where cash remains king. Think about this. In regions like India, Africa, and Southeast Asia, card and digital payment penetration is still in the early innings. In some countries, over 80% of transactions are still done in cash. And who's working with local banks and governments to change that? Visa. Whether it's launching contactless payments in Brazil or mobile-first debit solutions in Nigeria, Visa is already laying down the rails, quietly embedding itself into the foundation of the global digital economy. And then there's the e-commerce. As online shopping continues to explode globally, Visa benefits directly. Every online cart, every digital subscription, every rideshare, that's more transaction volume, more data, and more value-added services. Don't forget travel. Cross-border transactions are one of Visa's highest margin segments, and now with international travel roaring back, these revenue streams are surging once again. Visa's strength isn't just its scale, it's the ecosystem it's built around the scale. The company's competitive moat is one of the widest in the financial world. Let's start with the network effect. Visa has more than 4.3 billion cards on issue and accepted by 130 million merchants across over 200 countries. That's not just reach, it's entrenchment. The more consumers who use Visa, the more valuable it becomes to merchants. And the more merchants who accept Visa, the more indispensable it becomes to consumers. That flywheel just keeps spinning and competitors struggle to break in. Even fintech disruptors like PayPal, Stripe, Afterpay, or Square still rely on Visa's rails. When someone uses a digital wallet or a buy now, pay later option, chances are the backend still runs through Visa's network. In other words, Visa is getting paid whether you're swiping a physical card or checking out via an app. Then there's brand trust. Visa is not just a payments company, it's a symbol of global reliability. Whether you're in New York or Nairobi, Tokyo or Toronto, you know a Visa card is going to work. That trust is invaluable, especially in emerging markets where reliability is everything. And what about the threat of crypto? Well, the blockchain revolution is supposed to displace traditional payment networks. But here's the reality. Most crypto-based payment platforms have struggled to achieve scale. And even as governments explore central bank digital currencies, many of them are looking to integrate with Visa's existing systems for secure, real-time processing. Visa's moat isn't just about dominance, it's about adaptability. It has the infrastructure, partnerships, and reputation to evolve with the next generation of finance, not get left behind by it. Now, Visa knows exactly what to do with its cash, and that's another reason long-term investors should love this business. First, dividends. Visa has been growing its dividend every single year since going public. It's not a high-yield stock, and that's intentional, but its dividend growth has been consistent and shareholder-friendly. The payout ratio is conservative, which means there's room to grow even if earnings fluctuate. Second, and even more powerful, share buybacks. Visa is a machine when it comes to repurchasing its own stock. In the last financial year alone, Visa returned over $12 billion to shareholders through buybacks. Fewer shares mean higher earnings per share over time, and that quietly boosts returns for long-term holders. Most importantly, Visa doesn't waste capital. It doesn't make reckless acquisitions. It invests where it sees a return in technology, security, and partnerships that widen its moat. That kind of discipline is exactly what you want from a compounder. And remember, every year Visa grows, its scale advantage gets stronger, every buyback makes your slice of the company even more valuable. That's the kind of silent compounding effect that doesn't show up in headlines, but builds real wealth over time. Now let's be clear, no investment is risk-free. Even Visa has vulnerabilities. The most obvious is regulation. Governments around the world are paying more attention to payment processes, especially around interchange fees, those small charges Visa collects from merchants per transaction. In the US and Europe, regulators have considered capping those fees, which could put a small dent in margins. Then there's the rise of alternative payment platforms. Super apps in Asia like Alipay and WeChat Pay have built walled gardens that bypass traditional networks altogether. If that model spreads globally, Visa could face new kinds of competition. Not from banks, but from ecosystem. Cybersecurity is another ongoing concern. Visa processes over $14 trillion in payments annually. That makes it a constant target for fraud, scams, and sophisticated attacks. So far, Visa has stayed ahead of the curve, but the arms race never stops. Finally, there's the macro factor, consumer spending. If we enter a prolonged global slowdown, transaction volumes could temporarily decline. But here's the flip side. People tend to use cards more often during economic stress, especially for online and small ticket purchases. Visa has shown time and again that it can weather downturns and come out stronger. Now let's bring it back to you, the investor. What makes Visa so compelling is its combination of stability, scalability, and silent compounding. This is not a stock that grabs headlines, and that's exactly why it works. It's a business that earns 50% plus margins, doesn't need to chase capital, throws off billions in free cash flow, and returns it directly to shareholders, all while riding a multi-decade global shift from cash to digital. There are a few companies in the world with this level of predictability and growth. Visa is also a natural core holding. It fits in conservative portfolios, growth portfolios, and dividend portfolios. It benefits from global expansion, but it's not reliant on any single region or economy. It wins in digital, in physical retail, in travel, in subscriptions, you name it. If you believe in the growth of e-commerce, the rise of emerging markets, the future of digital payments, or simply the need for secure financial infrastructure, then you already believe in Visa. The numbers, the network, the discipline, it all lines up. And here's the key. Visa isn't done. It's not a mature company standing still. It's still expanding, still innovating, still strengthening its moat. It's the type of stock you buy, hold, and let work for you while others panic, pivot, and chase fads. Now, if you found this deep dive helpful, give it a like and share it with someone building their long-term portfolio. We break down powerful businesses like Visa every week, companies that quietly create wealth year after year. So hit the subscribe and turn on notifications if you want to stay ahead of the curve. And if you haven't already, check out our recent shorts video covering Visa's latest earnings highlights. It's a great snapshot before you dive into the numbers yourself. So thanks for watching, and we'll see you in the next video.